Hi, this is Bye Bye Money, and this is part 2 of putting it all together, intermediate level of price action trading. And you haven't watched the beginner level videos, I highly recommend that you watch those. We'll be using a lot of those concepts here, and those are the fundamentals. In this video, we'll go over context, how to draw channels, how to count legs, how to spot a two-legged pullback, and how to enter a short two-legged pullback. Here, first off, we'll start off with the overall context. By doing so, we'll make a channel connecting these two pivot lows, and the rule is when you make a channel, you connect two pivot lows that will have no other prices intersecting the trend line, and then you go a point above to the other side between these 2 points, and you'll make a trend line. So you have a channel here, and you see here that we have a two-tier channel, and right now this market breaking down the channel. You can see here that it tried to test it and it used as support, but then it quickly went down, and we see here that it tried to go back up, but it failed to do so. Now we'll look closer at the more intermediate context. To do so, we'll draw another trend line with a channel, connect these two pivot highs. We'll find a point that doesn't intersect, so we'll use this point here. I couldn't use this point because if I were to extend it to the left, it would intersect the trend line. So I actually have to use this point here when no other points are intersecting it. And the overall story right now is, now we have a two-tier channel again. You can see the tiers by this dotted line, which is at the 50% level of the channel. And we had spiked all the way down to hit the bottom of this channel, of this trend line. And now we are making an attempt to go upwards. Now we look at our immediate context. We had a strong bearish move, downtrend, and now we have bounced off this support, and what we're looking at here now, looking at where it got rejected, we have the 20 EMA, and not only that, we have this major trend line, and it got rejected right at it with a long wick. And so here we are looking for a short entry. With this rejection here, we have an excellent signal bar here, trying to find our two-legged pullback. If you remember, a two-legged pullback is simply this pattern here. A, B, C. First pullback, first entry, second pullback. And the context typically looks something like this. Before it, you will have a downtrend, a two-legged pullback, which is two pullbacks essentially. One pullback, we call this the first entry, second pullback, and we want to enter into the second entry, assuming that the original trend will resume. So we are looking for the entry here. This is what we have right here. Strong downtrend, hitting 3 points of resistance, 20 EMA, the bottom of this trend line, and not only that, the 50% level of this channel. If it's a two-tier channel, this is where we will find resistance. And so what we are looking for now is our two-legged pullback. Strong downtrend, we have one leg, two leg, 3 legs. So one pullback, first entry, second pullback, and now we want to enter into the second entry. If I were to mimic this pattern up on the top of the screen, this will be the same point right here. And so now we are expecting the market to go downwards. So to enter this trade, we will put our stop one tick below this signal bar. So we have an ABC pattern, ABC, ABC. I like to just say ABC because it's much easier to say. And first pullback, first entry, second pullback. So we will have our stop order one tick below this signal bar. Signal bar is the bar that creates the pivot high or low of the up leg or down leg. And so here we have, with my script, a symbol to show you what the next leg will be, signified by a dark red number. Here it's a 0. A dark red 0 showing that this will be a second entry of a two-legged pullback. The dark red and dark green numbers show two-legged pullbacks. And so we enter here one tick below the signal bar, and when that is done, then we will adjust our stop to be one tick above the signal bar. And so we have entered now the trade because now we have gone one tick below this signal bar, and we will raise our stop one tick above the signal bar. We have our limit orders here with a 1-point scalp with a runner. When this 1-point scalp is reached, we will move our stop to break even plus 1. And we will do that once this order hits. So the two-legged pullback just created a scalp, and now we have a runner. And you can adjust this runner as far as you want. You can keep moving it, until you think that the market is starting to reverse. I'm going to keep it here. And so also the runner got hit here. But you saw that I put my stop one tick beyond my break-even point to save commissions, to make this a risk-free trade. That's it for part 2, and I hope that has been helpful. Please watch part 3 to see how to trade a trap.